Welcome to this September update on asset allocation and fund of funds. Starting with a view on asset classes, on equities in the medium to long term, we have a constructive view as India's economy has recovered quickly from the second COVID wave. Consumption, investment, and exports are all expected to pick up over the next few years. Fiscal and monetary policy remains supportive, and the reform should also have a multiplier effect on growth. Hence, we believe that India's GDP growth will go back to its normal trend line of 6.5 to 7% over the next few years. Hence, this would lead to a revival in corporate profits, and Nifty earnings growth is expected to normalize to around 15% by FY23. Now, given the elevated valuations and the recent rally in the markets, in the short term, we do have a cautious view, but in the medium to long term, the risk reward for equities seems fairly balanced. Multi-cap and flexi-cap funds would be ideally suited in the current environment. On fixed income, we continue to believe that the RBI will keep monetary policy extraordinarily accommodative for a prolonged period so that no deep scars are left due to COVID and the growth signals become much more sustainable. Hence, in this context, floater and short-term funds continue to be the best risk-adjusted places for fixed income investors to have accrual returns over other fixed income assets. On gold, we have seen the prices rebounding after the weaker than expected jobs data from the US. However, in the short term, the expected Fed tapering, the normalization of the transitory inflation shock, and the removal of policy accommodation can be negative for gold. At the same time, the expected depreciation in the dollar can be a positive. Overall, we expect gold prices to remain range bound. Now, given this context, what are the actions we have taken in our asset allocator fund of fund? Well, we have gradually reduced our allocation to equities from 55% to 45% for the past month, given a cautious view in the short term, even as we maintain a positive outlook in the medium to long term. The core of the equity portfolio remains a large and diversified fund. However, to reduce the portfolio beta, we have reduced the exposure to small cap funds and increased the allocation to large cap funds. At the same time, we have exited our infrastructure fund and replaced it with a consumption-oriented Gen Next fund. We continue to maintain our allocation to the banking and financial services and digital themes, as well as to the international ETFs. Within equities, based on the allocation of the underlying funds, 60% allocation is to large cap stocks and 40% allocation is to mid and small cap stocks. On the sectoral front, BFSI, IT, and consumer have the highest allocation. On the fixed income side, the core of the portfolio remains the low duration and corporate bond funds, and we have maintained our allocation to gold at around 13%. So overall, our allocation to equity is around 45%, out of which domestic equity is 40% and international is 5%. Gold is around 13%, and the remaining 40% plus is to fixed income. The performance of the Aditya Birla Sun Life Asset Allocator Fund of Fund continues to be consistent. In the past 1 year, we have given a 33.5% return compared to the 27.5% return of the benchmark, and the fund continues to be in the top quartiles across short, medium, and long time frames. The performance of the fund has been aided by Aditya Birla Sun Life Digital India Fund, the Aditya Birla Sun Life Frontline Equity Fund, and the Aditya Birla Sun Life Banking and Financial Services Fund. At the same time, the S&P 500 ETF, which provides international exposure, has also contributed to performance. The Digital India Fund has increased its exposure to the large cap IT stocks like TCS, as well as to some telecom stocks like Bharti Airtel. It has booked profits in companies like Happiest Minds and Mindtree, and participated as an anchor investor in IPOs such as Zomato, and it continues to hold the positions in Root Mobile and Nazara Technologies. The Frontline Equity Fund is overweight on sectors like telecom, consumer durables, auto ancillaries, and so on, and the top 30 stocks account for about 80% of the portfolio. The key contributors to performance in August were banking stocks like HDFC Bank, ICICI Bank, Axis Bank, telecom stocks like Bharti, and the IT stocks like Tech Mahindra and HCL Tech. For the Banking and Financial Services Fund, it's a large cap oriented portfolio of about 26 stocks. The top contributing stocks in August were Bajaj Finance, HDFC Bank, Bajaj Finserv, and Axis Bank. On the banking sector, the view remains positive, and especially we believe that the banks, especially the large private sector banks and select mid-sized banks, are best positioned, followed by some of the better known housing finance companies. I hope this gave you a good overview on asset allocation and fund of funds. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.